Okay, today we're going to wrap up Chapter 8, and we're actually wrapping up the end of what we call the accounting cycle. We're at the very last point of the cycle, and we're going to learn, as you can tell by the title, how to prepare the post-closing trial balance. So first of all, let me tell you why we do it. When we start a new accounting period, which for most businesses is a month, going into the next month, we need to make sure that we start off in balance. And so after closing entries have been posted, and we talked about closing entries yesterday, there are only three types of accounts that should have a balance: assets, liabilities, and the owner's capital account. So everything else has been zeroed out through our closing entries. So what we're going to do here with this little form is we're going to verify that everything is in balance as we begin our new accounting period. And then the cycle starts all over again. But obviously you don't want to go into the next accounting period with your total debits not equaling your total credits. So just a quick recap, the purpose of the post-closing trial balance is to make sure that debits equal credits in the ledger after we've posted our closing entries. And this is an important step to move us into the next accounting period. Okay, so if you'll turn to 169 in your textbook, on workbook, and 230 in your textbook, I'm just going to walk through an example with you of preparing the post-closing trial balance. All right, and we're doing this, this business is for Fix It Now. We're using the same general ledger accounts that we used for the work together problem that we did yesterday. So you might want to have that problem to where you'll probably be turning, maybe flipping back and forth. But yesterday's business was the Fix It Now. And so that's going to be at the top of our post-closing trial balance, the name of the business, as usual. And then the name of the form will go next, and that's post-closing trial balance. And the date of the post-closing trial balance will always be the last day of the month. In this case, it's April the 30th. Okay, so that's the heading. Company name, form name, date. Okay, now using what we did yesterday, the work together problem, we're going to go to the beginning of the ledger. The first ledger account is cash, and all we're really literally doing here on the post-closing trial balance is we're listing the account starting with the first asset, and the balance of cash as of April 30 is $4,900. And then the next asset is petty cash, $75. And then accounts receivable B. Wydell is $1,387. Supplies, $75. Prepaid insurance, $250. Okay, turn in the page. Now we run into the liabilities. How do I know that this is a liability? Well, it says payable. That's one clue. And what does the account number tell us? Liabilities start with what in the ledger? 2. Okay, so we've now run into our liability section. And so we just keep listing. There's no indentation whatsoever. But you do need to just be aware that we now have credit balances. So the balance of accounts payable Southside Supplies is $267. And that's the only liability we have. So now let's list the capital account, Connor Whitney Capital, $6,420. Okay, and now we need a total. And this is the whole purpose of the post-closing trial balance. Those two numbers should agree. We need to add up the debit column. And I'll save you a little bit of time. If you add up the debit column correctly, you should get 6,687. And that should be the same for the two credits. If they do match, which they do, we'll double rule to indicate that everything's in balance. And that is the post-closing trial balance. So what accounts will appear? What are the only 3 types of accounts? Assets, liabilities, capital. What happened to the rest? How come? They zeroed out. What caused them to zero out? What did we do? The closing entries. Those are called what again? Those revenue, expenses, and drawing. They are temporary, and now you understand why we call them that, because they only remain in balance during a particular month, and then at the end of the month we'll just close their balances into capital, and we'll start the process all over again. Okay, so now I want you to do the on your own 8-2 problem, and we'll see what you can do with that.